All right, hello everyone, and welcome to another weekly wrap-up here at the GlobalTrader.Club YouTube page. My name is Meydan. If you're new to the channel, I'm a finance professional and I'm a fintech entrepreneur calculating the future swing days, the swing hours, and pricing of the market. So as you know, if you don't know now, you will know that we're calculating the future swing days, and I've calculated the whole years of 2025, 2026 already for the assets that I'm evaluating, and the hours, the swing days. After the swing days, we've got the swing hours. The swing hours of the day, I also calculate and I post them 10 days before the next month. So let's take a look at what we had. Let's do a bit of a wrap up and see how our trading went along. Now, also, we've got swing days, swing hours, and technical analysis. So we have to bring like all of them kind of together, and that makes our trading stress-free, and it helps us to follow things through nicely. Now, these are the swing days for the 12th to the 16th May. They were posted on the 20th of April, as you can see here, right before May started. So all of these swing days. Now, the swing days are intra-week swing days, so they are not going to be major swing days. Let's first do this and get me out of the way. All right, so these are the swing days, 12 to 16 May, posted on April 20, as you can see there, right? So we're going to see what happens. Also, every every day you also get a video, and you can see these videos on YouTube as well after they've been published in the members area. So they'll fall onto YouTube after like a day or two or three. Okay. So let's see what happened. Now, let's go one by one. So we had gold Monday, Tuesday. Now remember, with gold, I said, guys, it's Monday or Tuesday. We've got a swing day. In fact, I went long from here as well. And if you'll look at the videos, you'll see how those things panned out. But I did say, I gave a big warning. I said, guys, this is highly likely going to break out to the downside. And the reason I said that was it's the same thing. Got a double top with a descending kind of motion. And the same thing happened with the euro dollar. This is something where, we know about. There's gaps to fill. There's a gap to fill on gold as well, as you can see here. So I said this will probably fall down. All right. But in any case, I did say I am going to buy, because we're at a place where the market bought before. But I did say I'm unhappy about the buying because we've tapped into this place a few times already, and really not my cup of tea. Okay, but nevertheless, we did it. Now remember, swing days can also turn into a breakout day. Okay, so knowing those is an advantage for us, because once we enter here, understanding Monday, Tuesday is a swing day, if it doesn't work, it's going to go the other way. So this is why at the trading hours, when you trade at the trading hours, your stop loss is very, very tight. So your losses are small, but when things go in your direction, your winnings are huge. So Monday, Tuesday, let's take a look at Monday, Tuesday. All right, so this is gold. No, let's get rid of that. Monday, Tuesday. Here we are. All right, if you take a look at Monday, Tuesday videos, I just say these are like good to go up. Okay, good to go up. Tuesday, good to go up. In fact, I think it was on one of the days, I also gave hours between like 10:15 and 11:30, and that was like a good euro dollar trade as well, I think. But nevertheless, that's it. Monday, if you bought at the trading hours at the lows, let's take a look at the trading hours. Okay, remember I posted these at the end of April, the 20th of April actually. Right, so your trading should have started 12:50 to 1:30. 12:50 to 1:30 is there. That's your 1:30. And that's your 12:50 starting here. Market comes down, chucks a UE, and off we go. So you would have covered the trade. You would have definitely had some profit taken in there, because your stop loss after this bar here, okay, would have been just under this zone here. You would have either done a percentage risk, or you would have put your stop loss. If there was a daily pivot or whatever, or any of our daily lines, you could put your stop loss under there if it's not too far out. Okay, but once this hour is over, that's it. This is where you turn around. You can also wait for a U-turn as well. Sometimes I mention that. If you know what I'm talking about. Okay, so you can take a U-turn as well, go in a smaller time frame, or on a smaller time frame you could do a price action as well. It's your call. There are a few ways. We're learning it in the trading program. So, and then the market comes back down again. This is after the New York opening, so this is New York pretty much afternoon session. Market still going up again. So if you're doing those daily trades at the trading hour, as you can see, market pulling back, and this is a textbook example for those who are at the Global Trader Club anyway, because that's 37.5 at the trading hour. Okay, so nice and easy, going up, very tight stop loss, and so on. So this also works really good with scalping as well, because you've got, you know, technical analysis, timing, and so on. So all of that is on your side. Also on Tuesday, you can see market Tuesday trade hours, beautiful, just going up here. Now, because Monday or Tuesday is also a swing day, what you don't want to be doing, if you're a buyer, you want to be buying the lows, right? If you're a seller, if you wanted to sell on a Tuesday, okay, normally what we like to do is sell at the highs, right? So this is a swing day from the previous week. So this would have been a nice sell, but because we're low, we're punting on a buy, and because we're using swing hours with technical analysis, our risk is really, really small. So you don't have to get stressed out, but you need to buy on a pullback and not just at any trading hour, because when we're buying, we're cheap. This is Wednesday market going, as you can see, sideways. So this is snaking along, and I often mention in my videos, look, the market is snaking along, so they're either going to bang it up or bang it down. And as you can see, they banged this one down. So this is a really good example. How can you use timing and understand if they're going to bang it up or down? Well, easy, because if you draw your lines, you can say, well, these are the trading hours. I don't know which way this is going to go. So you sit tight and wait. Once the market breaks, that's it. Now, the beauty about knowing this is when the market breaks and you go in the direction, you already know the hours you're heading into. And if you know the future swing days and the swing hours, for this case the swing hours, you know where to follow this too, so you don't have to panic and rush. Once you understand we have a breakdown and we're going into New York nice and easy, and as you can see, New York pushing it down into the trade hours. So you know the trading hours, and this is Wednesday. Let's take a look at Wednesday, right? Wednesday. There you go. Look, I've even made some notes here. Expecting pushy moves until 11:30. Now, all of these are UTC +3, my time frame. Pushy moves. That's 11:30. So market going up and down a little bit. Nothing hectic. And then what have I got here? 11:30. If price is right from 12 to 135, it may turn and has potential to go to 730. So let's take a look at 12 to 135. Okay, so this is, remember my time, this is 130, and this is 12:45. This is 12 o'clock, so 12 o'clock, 130, market turning around, going all the way into 730, right? You can see there, it comes into 730, has a slight bounce, and then moves down. So from here it may continue to 9 to closing, so I can manage the trade or get out, or as you can see, 9 closing, we're in that zone. All right, and that's it. Now Thursday, let's take a look at Thursday. Thursday I had 9 to 10:15 starting off. There you go, 9 to 10:15. Is this it? This is it, 9 o'clock exactly. 10-15 market retracing. This is again a nice setup. It's a PST price level on a weekly. It is just something you don't want to miss if the time is right. And I always say PST is king. You got your levels, that's it. You just match them up. Whoops. You just match them up and trade it. If it matches the time, it's going to be a bingo trade. Sometimes even without the time, it's a bingo trade, because PST levels, like I always say, it's gold. So market comes in all the way up. Let's see what I wrote for Thursday. Now 1 o'clock, from here it can turn or break out. Okay, so 1 o'clock we're expecting a turn or a breakout. So this is 1:40, this is 1 o'clock. Okay, so 1 o'clock the market hasn't turned around. As you can see, we have a breakout, nice and easy. Okay, to the next hours, which is 3:45. Next hour, 3:45 is, where are you? 3:45 right there. Okay, this is 3:45 there. Okay, so the market is coming here. 3:45, look at the move on that dot. It's a 15-minute chart. Market opens at 3:45 there. Am I correct? This is 3:45. The bar opens up and just shoots up. Okay, can turn or break out to the next hours, 3:45 and 5 to 5:30, and that's your 5 to 5:30. We're just breaking out, as you can see. Okay, targeting 9:30 to 10:20 to closing. Targeting 9:30 to 10:20 to closing. There you go. All right, so if you know we're breaking out, okay, if you know there's an opportunity, then all you have to do is bingo. It looks the same here. You see how the market just didn't turn around. It just did not turn around, and instead it broke out. Once it breaks out, if you know the hours you're going to, you're not going to panic, and your stop losses are tight, because even if things we calculate do go wrong, and we are wrong, let's say, your stop loss is so tight that you're not going to be stressed out unless you've done something crazy and went in with 1,000 lots. Okay, so that's a Thursday, and then we've got a Friday. Friday was interesting because I don't work on Fridays, and just as I was doing the video, right, we were at this hour, 6:40, and I said to myself, this is not bad, 6:40. So I entered a trade there, put the target there, the first take profit, and the stop loss was somewhere around here, and I had 2 positions open, and this already had like 1 to 2. I think it was slightly lower there. Yeah, it's slightly lower, and it was 1 to 2 risk return if I got here on one of the positions. And then I said in the video, I said, guys, I don't know how this is going to pan out, because this can go down into this zone, okay, into the next trading hours, or we could go up into the next trading hours. That was for me unclear. But what I did see here at this, if you learn timing from me, you would have said to yourself, this is an adjustment, you know, retracement. So it's like good to get in with a tight stop loss, and you can just like get some bread and butter for the day, and then, you know, piss off. Which is exactly what I did, because I went to the farmer's market on Fridays. I go to the farmer's market, and it's a nice experience. So we got in there because this was happening exactly as I was doing the video. So I said, okay, we just get in, and so on. And then the market took my profit 1 to 2, and then the second position got stopped out, and we still had a profit because it was 1 to 2. So no loss of love, and that was bread and butter basically for the weekend. And here then we've got the next hours, as you can see, market going up, reversing from New York into there, and what did I say? There you go, we've got 5:55, and then we've got 7:50, 8:45 targeting closing. And this must be, this is 5:45 my time. You can see the market just going up. But this is a classic situation as well. If you've learned from me, remember, same kind of thing. That's the top, that's the bottom. 37.5 at a trading hour. Same setup, 37.5 trading hour. If you entered on that bar right after this bar closed, your stop loss should have been just under the low of that bar. So it's literally it's literally pretty much half a bar stop loss, because that's the bar. If you enter there, that's half a bar stop loss. So it's the same setup over and over again. If you're missing a level, if you're not sure about a level, or if the level bounced up into a trading hour, wait for it. Okay, just wait for it. Wait to see how things pan out, because the minute a trading hour is over, okay, or you can do something very simple, right? This is your trading hour. Once your trading hour is over, you can wait for the market to close above that bar. Once it closes above that bar, that's your call. Why? Because that thing isn't turning around now. Okay, so now we are in the good direction that we were contemplating, because we went down from the lows, we want to go up. Okay, and there's the gap there. So the market wants to close it in, and that's how it is. Market closed it up, and at the closing, that's where the market ended up. So all of that is just doable. You don't have to stress out. Instead of waiting for, oh, are we going to have a swing hour? Is it going to swing around? Why not just, wait to see how things pan out as well if you're not sure. And I always say, when in doubt, stay out. For the same thing we can do for the euro dollar, as you can see with the euro dollar, Wednesday or Thursday. That's your Friday, Wednesday, Thursday, right? So I had Wednesday, Thursday. Market goes up into Wednesday. I talked about this level. Okay, in fact, I had a sell trade in there. You can watch the videos as well. Why? Because that's the impulse. Look at that, 37.5. I actually made a point of that in the members area, I think. It should be either on the members area. Here it is. Euro dollar. All right, so that's that bar there, 37.5. Market comes into it at the trading hour. Let's take a look at that. Let's do a close-up. Wednesday, that's your Wednesday. Trading hours on a Wednesday, close to the weekly pivot, 37.5. Market sells off. The next day, Thursday, what did I say? Market, the same thing. Look, we've got the impulse wave, market coming into 37.5. Same setup, 37.5. What does it do at the trading hour? If you sold here, your stop loss needed to be just above that high there, and if you kept it, which is exactly what I should have posted. That's why I did post it, didn't I? Let me see, because on the euro dollar we had a post. That's SP 500. Here's the euro dollar example. There you go. Okay, now this is me entering, covering trade, is it? Or here. Okay, this is the entry here. Okay, and that is, as you can see, the 37.5, because that's Wednesday. Okay, see, that's the Wednesday there. So I actually posted this as well in the members area, because this was a classic, because you got the impulse coming back into the 37.5. It's the same setup like on the daily, remember? So on the daily, impulse 37.5, go back into the 15-minute, impulse of the swing day down, market coming into the 37.5 of this impulse, and it's a trading hour, and that's why I posted it there, and I said this should come down, and there you go, right? So that's Thursday, it came into there, Friday it came into there, so you should all be honky-dory. Okay, so pretty much that's it. Let's take a look at SP 500. The indices were a little tricky, weren't they? Now with the indices, I said this is a sell zone, so I wouldn't be buying here unless we had a real, unless we had a pullback to go up into a swing day. As you can see, SP 500 was all high, and let's do this. And the reason it was a bit tricky is because I had Monday, Tuesday, Thursday, Friday, Thursday, Friday, Friday. Okay, so the only off day for this was a Wednesday, and pretty much all the weeks of the day, or all the days of the week, sorry, covered here with just Wednesday out of the box. It was a bit tricky. All right, so as you can see here, all the indices there. All right, SP 500, Dow Jones, and Nasdaq. All right, so then if we come back into there, then we've got Monday, Tuesday, Friday. Yes, it is open. Monday, Tuesday, Friday. Let's take a look. So that's your Friday, Thursday, Wednesday, Tuesday, Monday. So Monday there was nothing really to do, right? And Tuesday we were up here. So Tuesday could have been a sell day from here. Okay, the market didn't sell. Sorry. Anyway. Okay, you can take it if you want. Do you want to take it? No, it's yours. All right, so this is from this level here. We can sell it off. That was the whole idea. All right, and as you can see, this zone here, this is from previous week, I think. Okay, because that's Friday, Thursday, Wednesday, Tuesday. That's a Monday. All right, so if I do this Monday there, so if we came back into the green rectangle, Monday, Tuesday, we could have sold off, and that would have been the way to go on SP 500 because it was Monday or Tuesday. Now Monday you would not have done anything because it was not at our technical level. Remember, you got to use the swing day with a technical level. Okay, so that is why you wouldn't have done anything here. On Tuesday you could have sold. Let's take a look at Tuesday. If we had sold on Tuesday, let's take a look. On Tuesday, so this is Tuesday, right? Let's take a look. Let's put all the hours there. Let's really sink into this one. So let's take a look at the New York session from London, 105 to 120. 105, 105. This is 105 to 120. That's 105 to 120 zone here. Okay, so is this a place to sell? Let's see what the price is here. It's 5828. Let's go to the daily. So we're in the zone. 5828. 58. We're not in the zone. Okay, 5828 is not in the zone. So you wouldn't have sold here. Okay, remember, look, this is a zone. So this is not a place to sell. Where are you gonna sell? You're gonna sell in this zone. Now, if you bought there because you're not in the zone to go up, you would have made money. Okay, so this is it. And remember, I also put this level up here because we've got a gap here. All right, so this rectangle box is, for us, it's like a logical box as well as a target because of the gap, right? But this is the zone, 5872, 5957. So 5872, let's mark them in 5872, and the high of that 5972, was it, or something around there? Okay, 5957. 5957, pretty much there. Okay, so this is the zone where you could have sold at. Okay, now this is on a Tuesday. Remember, it's Monday or Tuesday. All right, so this is not a price level for us. This is not a price level for us. The only zone is here. So if you sold in this zone, what time should you have sold? Let's take a look. This is Tuesday, right? Okay, and I've got expect sudden moves towards 4 o'clock. The next hours is 5:15, 7:10, and closing. 5:15, 7:10, closing. So let's take a look. 5:15. So this is a place where you could have waited to sell. 5:15 to 7:15 is there. All right, and then we've got closing there. So this was the zone where you could have sold off, okay, in between that zone. Let's get rid of that because that's not valid. If you sold in this zone here, okay, you would have been probably stopped out, okay, because that's your 5:15 bar there. So if you sold, this would have been like your sell zone. So you would have been stopped out here, but you would have been really stopped out nice and tight. Okay. If you waited for the U-turn, you would not have entered the trade because no U-turn happened here. Okay. If you sold on this bar or that bar, you would have been stopped out though. That's it. Why? Because your stop loss should have been just above the high, and that's it. Tight stop loss. All right. Now, if you sold on a Thursday or a Friday, do I have Thursday and a Friday with SP 500? We only had Friday, right? SP 500. There you go, just Friday. So if you sold on a Friday, in New York, that would have been from 350 onwards. So 350, 550, 750, 850. 350. Now, if you sold at 350, you should have been okay. You would have covered the trade. At 550, you would have been like, okay, time to manage the trade. Okay, because right there it went into 750, 850, targeting closing. 850. And look what happened at the closing. All right, so there you go, 750 to 845. So from there, it's going into 750, 845 in that zone there. Okay, nice and easy. Targeting closing pretty much, and the last bar is just falling off. Okay, so it's all pretty much set. Whatever you're trading, let's take a look at Bitcoin as well. With the indices, gold, euro, dollar, Bitcoin, whatever you're trading, if you just focus on the swing days, the swing hours with a price target, you should be all good. If you've got a good pricing model, like PST, and you wait for the PST levels, then you're obviously going to be like, okay with it, simply because, let me turn this into a 15-minute chart. Because the PST gives us really good accurate pricing. If it matches an hour, that's it, like I'm in that game. Now with Bitcoin as well, let's take a look. I only had Wednesday for a swing day on Bitcoin last week, right? So this is Wednesday. And then these are the hours for Wednesday. Let's do this. So these are your hours. Let's take a look at Wednesday. This is Wednesday. So as you can see, market falls off on Wednesday into Thursday. So at the end of the day, that opening Wednesday took us all the way down into Thursday. Where are we today? Let's do this. So today is Sunday. Okay. So as you can see, that's pretty much closing off Tuesday. All right, and that's it basically. Market coming down from Wednesday, opening to the low of Thursday there. So that's a nice swing day kind of thing. As you can see, this zone for us is still not a buy zone. You can see they've tapped into it quite a bit. Let's expand that. All right, this is for us a sell heavy zone. All right, so you don't want to be selling You don't want to be buying at a sell heavy zone. Mind you though, this is turning into a pennant and we have a breakout. Now this breakout happened today. It's the PST daily. So then you got 72 for a target. That's 104,644. All right. So you can see if you're using your PST, you can trade this obviously on the weekend too, and that's going to give you targets as well. Let's take a look at the weekly. As you can see, the weekly, once it broke out last month, going all the way into there. So yeah, but for us this is a sell zone, and I've been saying, you know, don't buy here unless we have a breakout and a pullback to go up, because this has got room to come down. As you can see, we'll see how things pan out. Right, hope the wrap up helps. If you can match swing days, swing hours, your trading is much safer. Stop losses are much tighter and your risk is much lower. Have a good Sunday.